Welcome back to the channel, everyone. In today's video, we're going to break down exactly what is happening with Cardano and the broader crypto market as we officially step into the month of, because there is actually a very interesting pattern, almost like a curse, that has historically affected ADA and many other crypto assets around this time of year. And if you've been in the market for a while, you've probably heard the phrase sell in May and go away. But what makes this situation different right now is the information provided in this video script is for educational and informational purposes only and should not be considered as financial, investment, or trading advice. The discussion around Cardano, Bitcoin, and the broader cryptocurrency market is based on personal analysis, historical data, and publicly available information, which may change at any time without notice. Cryptocurrency markets are highly volatile and risky, and prices can go up or down significantly in a short period of time. Past performance is not a guarantee of future results, and any predictions or expectations mentioned in this content should not be taken as certainty. That even though history gives us one expectation, the current data is starting to tell a slightly different story. So let's dive into this in detail and understand both sides of the picture so you can stay prepared instead of surprised. Now, historically, when we look back at previous years, especially around May, we often see weakness in the market. For example, if you go back and analyze past performance, there have been multiple instances where ADA either slowed down significantly or saw declines of 15% or even more within a span of 30 to 60 days. And while there have been occasional exceptions like a green close in certain years such as 2025, even in those cases, the market still followed up with red periods shortly after, which shows that seasonality does play a role to some extent. So if we purely follow historical patterns, then yes, it is completely possible that ADA could see a 15% or greater pullback from current levels over the next couple of months. And that is not something to ignore. But at the same time, it is also not something to panic about because history is a guide, not a guarantee. And markets are always evolving based on new data, new participants, and new macro conditions. Now, what makes this year particularly interesting is that we are not entering May after a massive rally or euphoric run-up like we've seen in previous cycles. Instead, what we are seeing right now is more of a stabilization phase, especially when you look at Bitcoin and ADA. The price action has clearly shown that the downward momentum is slowing, the selling pressure is starting to flatten out, and the market is beginning to form what could potentially be a base for a reversal. And this is important because entering May during a cooling or bottoming phase is very different compared to entering it at the peak of a rally. Now, alongside this technical behavior, the on-chain data is also starting to support a more bullish narrative. For example, one of the biggest factors right now is whale accumulation. Large holders have been steadily increasing their positions over time, and this is not happening in isolation because institutions are also showing signs of accumulation. And when you combine that with rising liquidity in the market, it creates a very interesting setup. At the same time, we are seeing historically low levels of ADA and other crypto assets sitting on exchanges, which essentially means that there is less supply readily available for selling. And just to give you an idea of how strong this trend has been, even in the past week alone, we have seen around $8 million worth of ADA flow out of exchanges. And before that, there was approximately $3.64 million in outflows the previous week. So despite small green bounces here and there, the overall trend has clearly been consistent: accumulation, accumulation, and more accumulation. And this is critical because markets move based on supply and demand dynamics. So what happens when supply on exchanges keeps dropping while liquidity in the system continues to rise? Eventually, these two forces collide. And when they do, that is typically when you start to see price movement to the upside. Now, of course, demand still plays a major role here. If demand remains weak, then price movement will be limited. But if we start to see even a moderate increase in demand while supply remains constrained, it can act as a catalyst that initiates the kind of reversal many investors are waiting for. And it may not be an explosive move right away because that usually requires strong retail participation and large inflows. But it can definitely begin the shift in momentum from bearish to bullish. Now, on the other side of the argument, there are still many traders and analysts who are expecting further downside. And to be fair, that scenario is still on the table because no one can predict the market with absolute certainty. And as we mentioned earlier, historical patterns do suggest that May can bring weakness. So if we do see another leg down, it should not come as a shock. However, what makes the current situation unique is that there are multiple indicators aligning in favor of a potential upside move or at least a counter-trend rally that could catch a lot of bearish positions off guard. And that is something you need to be mentally prepared for because markets often move in the direction that causes the most pain to the majority. And right now, there is still a decent amount of bearish sentiment and hesitation among retail investors. So the question becomes whether the market will continue lower following historical trends or whether it will break that pattern and move higher due to the underlying accumulation and improving conditions. And another key factor to consider is that we are coming off a period filled with major macro uncertainty and black swan type events that have already shaken the market significantly. And historically, after such events, markets tend to stabilize and eventually recover as confidence slowly returns. So the big question right now is whether we are at the early stages of that recovery phase. All signs such as accumulation, reduced exchange supply, and stabilizing price action suggest that the market is being quietly set up for a potential rally. But the final trigger will depend on whether stronger demand enters the space, whether institutional money continues to flow in, and whether retail investors step back in with confidence instead of fear. Because at the end of the day, markets are driven by participation. And without participation, even the strongest setups can take time to play out. So as we move further in to keep both scenarios in mind, respect the historical patterns, but also stay open to the possibility that this time could play out differently. Because the data right now is not completely aligned with the typical bearish narrative we see during this period. And that creates opportunity for those who are paying attention and staying patient. So if you found value in this breakdown, make sure you hit that like button, subscribe to the channel, and turn on notifications so you don't miss any future updates as we continue to track ADA and the overall crypto market in real time.